Market rallied yesterday on the back of Fed comments on more aggressive rate policy. What does that mean for the markets in the short term? That's up next on today's 3 Minutes on Markets and Money. So yesterday, Fed Chairman Jerome Powell, now renominated as Fed Chairman by Joe Biden, of course, for that role, talked specifically yesterday about the need for more aggressive rate hiking campaigns and really tapering the balance sheet even faster. Now looking at ultimately 4 rate hikes this year and a much faster rundown in the balance sheet, of course, by the Federal Reserve. This is potentially going to extract liquidity from the markets, but Jerome Powell's position is that with the economy recovering very strongly, high inflation is now the battle that needs to be fought here. But of course, what seems to be missing is the understanding that the economic recovery that has come in here has been a function of the massive amount of liquidity injected into the markets back in 2020, 2021. That now is coming out of the system at a time where you're now going to extract monetary policy from the system as well, adding to that liquidity extraction. This really tends to put the markets in a much more precarious position as we move further into the year. In the short term, though, markets did kind of rally on that news yesterday because of the fact that he basically only reiterated what he was saying before. It wasn't more aggressive than the minutes that were said back in December. So the markets did rally yesterday on those comments by Jerome Powell, and the Nasdaq, coming off that 3 standard deviation move we talked about yesterday morning, had a nice rally yesterday. Today, markets are going to try to test that crossover between the 50 and the 20-day moving average. So again, a good bit of overhead resistance here in the short term. We did add some cues to our momentum model yesterday for this trade. Kind of watching this here closely. We are getting a bounce from the oversold condition in the markets, but we're still currently on a sell signal. However, that sell signal is getting fairly deep here. So again, we could see some follow through here on the Nasdaq over the next few days. The real challenge, if we can get above these moving averages, that'll set the markets up for a retest of recent highs. Now, if we go much further than that, really don't know. But again, the market does have a decent setup here, and we're starting to see some risk appetite returning to the markets. A good measure of kind of that risk appetite proxy, of course, is Bitcoin, cryptocurrency. That had been under a tremendous amount of pressure here as of late, with liquidations going on really all through the last part of December and into the early part of January. Did see a bit of a rally here yesterday. Importantly, the money flow buy signal has now turned positive. That suggests we're going to get a bit more rally now in Bitcoin, probably back to the $49,000, $50,000 range on Bitcoin. So a little trade here set up, again, oversold here. So again, with the buy signal in place, this suggests that we're getting a bit more of a risk on appetite in the markets. Again, that could help push asset prices up here in the short term. But again, I would certainly look to use any rally we get in the S&P and the Nasdaq. Importantly, because of the overweighting of the major players there, look to use that rally to clean up anything that's really been lagging your portfolios, do some rebalancing of the risk. Again, as we move further out into this year, as the Fed begins to taper their balance sheet, being more aggressive with those rate hikes, expect to see a good bit of volatility. So use this opportunity to reduce that risk profile in your overall portfolio. If you need help, get by the website, realinvestmentadvice.com. Send us an email. Always happy to help you. You can also go by our website and follow all of our trades and analysis at simpleadvisor.com. It's all there to help you be a better trader and investor of your money. See you back here tomorrow.